Hello, everybody. Good morning and welcome, as always, to TradeGate Hub's the morning market update. Of course, I am your host, Eliman Dambell, and thank you for taking the time to join the session here this morning. Hope everyone had a great weekend. And guys, what we are going to be doing today, of course, is essentially, since it is the first day of the week, we are going to somewhat look at what has happened over the course of the weekend. Of course, in mainly Bitcoin, that was the main market which was open. We saw a lot of action taking place in BTC USD, so we will start off the session there, but also as far as the rest of the session, previewing what is to come today and what moves are potentially likely to occur. A lot of moves in which we did look at the Friday session. I saw with the SPX, gold, and a few others, a few moves took place there, so we will have the opportunity to briefly recap those as well. Before we do begin, as always, please take the time and focus your attention towards the description where you will find a risk warning. Again, these sessions aren't here to give you advice. These sessions aren't here to give you any guidance as far as where you should buy or sell. It's just to give you an overview of what is happening in the markets. As far as crypto markets, starting off with BTC USD, Bitcoin, Elon Musk and his influence on the cryptocurrency world seems to have continued over the weekend. Essentially, the Tesla founder tweeting or essentially reposting a quote which essentially stated in Q2, cryptocurrency investors or Bitcoin traders are going to be left holding the baby. Is that actually the right term? I'm not sure. Is that the right term? Every time I say it, and sometimes with terms, I'm a bit outdated. I'm not sure if that's a PC term to still use. I'll probably have to do some due diligence after the session. But essentially, the quote stated, crypto investors will be left surprised to find that Tesla would have sold all of their cryptocurrencies and Bitcoin positions in Q2. And essentially, Elon Musk replied to that message, to that screen grab, saying, "Indeed." And a lot of people took that as him essentially confirming those claims, confirming those comments that there is a potential of Tesla having already sold its Bitcoin. And essentially, we saw what happened to the market over the last few days, continue to tank. BTC USD going as low as, let's bring this up, going as low as 42, essentially 42K, going as low as 42K, which was its lowest position, of course, as you can see, since February. So it's been a while. It's been a while since BTC USD has traded at these lows. But guys, what we are seeing in relation to the volume, as the markets had hit that level in relation to price, in relation to value, 42K, we saw what that meant for the RSI hitting that 33 level. And generally, we can see that has acted as a floor. Just zooming out, going back historically, going back the last few years, you can see, of course, there in March, you have, I don't know, of last year, you have the markets going below that level. But for the most part, we see it likes to remain above 33. So now it is at 33. The question is, are we going to see a reversal? Now, it seems, I don't know, overnight, Musk has had a reversal of positioning, essentially tweeting out just to confirm Tesla has sold none of its BTC USD positions. So, of course, due to that, we have seen some rallies. But I think from a technical perspective, we were always going to see some buys at that level. We were always going to see some entrants coming in there, as we saw previous bulls essentially residing at that level as well. So that false breakout took place. But since then, we see the markets, after hitting that low of 42, we're now at 45. So a 3K move in the last few hours has taken place, taking us back up to, and you can see even as I speak, that wick is just growing ever larger. The body of that candlestick is growing. The green is growing, essentially, with those previous bulls trying to re-enter the fray. So a very, very interesting one there. just to pay attention to as far as BTC USD, and of course, if you look at, let's say, Ethereum, just to see what the situation that is there. You can see in the last few hours something similar. You saw, I don't know, the seller force breakout, and now you can see the markets are rallying as well. Similar level. Oof, look at that candlestick there on Ether. Potentially, could we be heading to that ceiling of around 36K? We're pretty much almost there, actually. So I wouldn't be surprised if that resistance is somewhat recaptured today. Then I think thereafter it may be a wait and see, hold your breath moment, just to see where the markets may be moving to next. So the crypto side of things has definitely been interesting over the weekend. It started off, and to be honest, from what I've noticed in the last few months, generally speaking, is where we start to see a lot of moves taking place in crypto over the weekend, and this weekend absolutely seems to be no different. So it will be interesting to see. Oof, look at that moving in Ethereum just continuing, but it will be interesting to see how the week progresses. Are we going to be in store for consolidation now? Just going back to BTC, are we going to be in store for consolidation, or are we going to see some rallies? And guys, if you remember last week, we saw opportunity for bulls, but the moving averages are still showing us, I don't know, bearish momentum. And if I hate to do this on these sessions, I very rarely like to give you a full view, but let me do it anyway. Let's go to a weekly. And if you look at a weekly side of things, guys, we're still not even oversold. We're still not even oversold or close to. So we're still leaning. Again, above 70 is overbought, below 30 is oversold. 51.7, which is still closer to being overbought than oversold. So from that perspective, and if you go to a monthly, it's probably going to be even we're oversold, we're overbought in a monthly. We're overbought in a month. Of course, we're overbought in a month. The market went from, I don't know, 14K, 16K in December to damn near 60 in a few months. So, of course, we're overbought. But I essentially say that to say this. If this is, I don't know, the beginning of a huge sell-off in crypto, looking at the daily time frame and saying we're over, so it's relative. It's relative to time. In the grand scheme of things, there is still much. There's still more to go from a bearish perspective. There's still more bearish opportunities left in this. But from an intraday perspective, it's a case of just ensuring you do the analysis, pay attention to the signs. And at the moment, I believe, just to quickly round this up, it's going to be unsaid. I believe, I don't know, the next 6K, even if there is a potential for rallies towards that 51 level, 51K level, you just see all of the uncertainty that will come with that potential ascent to $51,000. So that's Bitcoin. Swiftly moving onwards, gold has had, and let's put it this way. Of course, on Friday, every morning, 9 a.m., we have these sessions. Friday, 9 a.m., we were looking at the potential of retail sales in the US and essentially what could happen from a retail sales perspective. Of course, the numbers came and it essentially came unchanged. So it remained flat. We didn't see any growth. We didn't see any decline. Retail sales there in the US remained flat, and a lot of people believe this is essentially due to the fact that, of course, the month prior came hot off the heels of President Biden's $1.2 trillion stimulus package, where I believe each American received. I'm actually American. I'm still waiting for my check, where each American received $1,400 in the mail. And I don't know if they got my wrong address. But for those of them who did, essentially that contributed to the retail spending, to consumer spending, consumer confidence in March. Unfortunately, April seemed that those $1,400 were already spent. Jobs, of course, we saw NFP. Jobs didn't come to the extent in which they were expected. So you see little signs which explain why retail sales remained flat last month. Jobs weren't coming in as expected. Jobs weren't growing. And of course, that stimulus package started to fade away. So essentially, if you recall what we were looking at last week in relation to gold, we said, could we see the markets potentially doing this, remaining within that resistance, since we saw a lot of bears there? Could we be headed back towards those 1700 areas? But of course, you saw with the weaker or unchanged retail sales, somewhat painting a grim picture there for the US economy, that breakout in which we somewhat said could happen, has happened. Markets now trading at 1853. So this looks to be bullish. Look at the candlestick today and look at the real last bullish candlestick there. And you do have some other, even look at that count. Of course, that's highly uncertain what happened there, hit that high and came crashing down. But there are bulls there. It's an area which absolutely I despise, to be honest, as far as just from an aesthetic perspective. It just looks like a mess. It looks like, for me personally, an area I'd like to stay away from. As soon as you buy, it falls. As soon as you sell, it rises. So for me personally, it doesn't look like too much. I think I would have been anticipating that move there Friday. And then thereafter, it becomes a bit nasty. It becomes a bit nasty to stay involved. I wouldn't be surprised if those who would have been involved on Friday would have already left. Because if you remember Friday, we saw those false breakouts, especially like that. So now you can see the market has just broken. I wouldn't be surprised if later on today, US Open, we start to see this level dwindle down. Currently at again $1,853, but I wouldn't be surprised if this starts to tail off, going back towards the 1825 level as the day progresses. So that's gold. Let me just quickly look at a shorter term time frame as well. Yeah, you see that crossover there. Yeah, in 1 hour as well. 1 hour, that was the move. Great move, absolutely lovely move. But since then, crossover has happened. Clearly overbought. Where else is there to go? Where else is there to go? What goes up? I'll let you finish it. Okay, so what else? S&P 500, SPX. Let's quickly look at the daily time frame. Now, in relation to the daily time frame, what we can see, of course, we saw Thursday, Friday, huge rebounds there from the SPX. And I can't really explain this, actually. I can't really explain why. I think it's from a technical perspective, we saw it come. Remember, guys, when we were talking about this pretty much since last Wednesday. When we asked the question, we saw the markets coming down. Historically, we saw buying at that level there. Remember us talking about the RSI and anticipating a bounce back. Essentially, investors taking advantage of the discount, because typically whenever we do see US equities or indices somewhat fall, especially to a degree as such, we do tend to see somewhat of an immediate rebound. And of course, that rebound has absolutely been evident for all to see. I think now the question is, is the rebound going to continue? But at that stage, it wouldn't be a rebound. Will the rebound turn into bullish momentum for us to see further rallies, further potential all-time highs? You can see where that ATH is. We're not too far away. We're not a stone throws away. We're probably we're not too far. We're not too far from that ATH. And if I'm being absolutely honest, I think. Let me put it this way, guys. Let me put it this way. And I'm cautious. I'm cautious how I articulate this. A month ago, because outside of this, I have my own webinar series, which I normally do on a weekly basis. A few months ago, when the Dow, I beg your pardon, when the S&P was trading around that floor, because it's the same chart I usually use. And again, risk warning disclaimer in place. For me, it was just absolutely obvious. There was no ifs, ands, buts, or maybes. The S&P 500 was going to go above and beyond 4K. It was just obvious. Some things you see are just very obvious. But even if it's obvious, even if you're able to somewhat envisage and do the analysis and see that we can all do it, guys. The easiest part of trading, guys, is knowing where the market's going to head. This is my own perspective. The easiest part of trading is aligning the stars, looking at your moving averages, looking at your RSI, doing the analysis and saying, okay, from everything I've seen, damn near everything is telling me this is going upwards, and you can somewhat be confident in that. But that still, you could probably still lose money. And most people still lose money, even though they have a faint idea, because it's all about timing. Everyone's right in relative to time. So if I don't know, someone believes the market is going to go down, absolutely it will go down. But when will it go down? When will it go up? So this will hit an all-time high, absolutely. This will recapture that all-time high, and it will set a new all-time high. But when exactly will that be? Would it be this week? And in saying that, let me just quickly go on to the economic calendar to see, I don't know what's happening. Today, there's not much. We just have, what do we have today? GDP numbers out of Japan. But for the rest of the week, what do we have from the US? Of course, what are we today? Wednesday, we have FOMC minutes. So between now and when, FOMC minutes, and we have manufacturing PMI coming out on Friday as well. But FOMC minutes, let's stay there. FOMC minutes Wednesday. Depending on what the FOMC minutes hold, what the accounts of the last Fed meeting essentially reveals, could that have an impact? Could we see consolidation before then, or whatever the case? But I do believe whenever it is going to be, we are going to see that high recapture, that high reached. But again, from your own perspective, it's a matter of timing, and this is the real hard part and difficulty of being a trader, is trying to gauge when that will be. What could be happening, what fundamentals are in play that could coincide with this. We haven't really seen the effects of this, I don't know, the situation in Israel at the moment. The pressure hasn't really been placed onto the US markets. Of course, we know the relationship there, but we haven't really seen things spill over to the financial market side of things as of yet as well. Will that happen? So there's a lot of question marks. There's a lot that could potentially influence this, and we just don't know. We just don't know, but the direction tells us there's a possibility it could be heading there. So it's just a case of waiting and seeing. But at the same time, if you're looking at the shorter term time frames, you do have somewhat of a different perspective there as well. And an hourly, it looks potentially like it's heading back to 4127. In a 4 hourly, it looks like it could be continuing into this channel, and it's just, I don't know, somewhat stuck at the halfway house on its way back to 4244. So different ways to look at it. This one looks fairly clean in a sense, because you may be asking yourself, what happens when this breaks 61? You would imagine once it hits 61, it's probably going to be trading at that resistance. Then you're going to ask the question, will you have enough momentum to continue back towards that ATH? And in a sense, guys, it looks similar to this. Look at this, in a sense. And guys, when the market falls or rises, sometimes you can look at a chart historically, see how the action was like in the past. But each rally, each move takes a different journey. This is what I mean by that. Similar position there to where we are now. You can see that fall. You see the markets climb up, but here it consolidated for a while before it rallied. Here the markets went up, fell. Now, who's to say what the journey is going to be like going forward? Are we going to have a repeat of this journey where it consolidates for a few days, then rallies, or are we just going to see an instantaneous? We have, or could it even just continue to fall just due to the fact that we do have quite a lot of bears there? So the course of just this journey is still yet to be decided, but I think the two indications which I'm looking at mainly is that number there, 55. Can it edge closer to 61 and above? And if so, will we see this moving average, that 10 EMA, essentially cross over? It's already crossed over to 25, but can it cross over to 50? If that does happen, I think we will be at least somewhere around there. at least 41.90, somewhere around there. And we've seen the uncertainty which has taken place there. So I think realistically, that's the next stop people from a bullish perspective. From a bullish perspective, I think this is where people are probably targeting around 4,200. From a bearish perspective, I wouldn't be surprised. From a bearish perspective, I think we're there. It's as far as the next floor. We are at that floor already. Could we be heading to that lower floor, that second tier floor, or are we going to be heading to that second tier resistance? So a lot of question marks. Hopefully the next days can provide some answers there. Moving on to currencies, we need to spend more time looking at the forex side of things. Cable. Looking at cable, GBP USD, of course, in the last few hours, again, you're just seeing that consolidation take place in the last few hours there. Huge move there earlier on. Looking at the moving averages there, it does look like it is, but of course we've had that sell-off so far, but you do see the opportunity for that to continue if there is. So that is a flaw. Absolutely, we can't take away that flaw. It is a flaw, but could we see further moves? Because in a sense, it's different because you see that streak started off a bit higher, but could we see this resistance continue to bring us down to, let's say, somewhere around there? Let's have a look. It really looks like we are at the floor, however, in that regards. You can see it acting as a floor there, as a floor. So with this, where are we? 51, currently at 52. It's a case of, because look at that, guys. In that instance, when the markets did fall, you can see it broke out of that 51 level and just continued lower. So I think as far as history potentially repeating itself and an opportunity, bearish opportunity being somewhat created, it's going to take this. It's going to take a breakout of 51. So I think a lot of people here are going to be looking at the RSI, seeing if it's able to hit, I don't know, the 49s, 48s. And if it does, I think that's when you're going to see this candlestick potentially repeat itself somewhere around there. Maybe not even to that extent. You may even see a lower move. But I believe a lot of people are waiting to see if that RSI can be broken. But at the same time, looking at what has happened at the from a bullish perspective, it's a case of seeing is 51 going to hold? Are we going to head into 52, 53, 54? And if that does happen again, you'll see those bulls start to believe that they are still in the game, and you may see this continue upwards. Just to give you a larger perspective on a daily. On the daily, we still haven't really hit that floor there as well. So on a daily, you see the possibility of more bears and bulls. But guys, at the same time, who's to say? This is the second time in the last, I don't know, 2.5 months it's really touched that resistance. Are we preparing for a breakout? Question mark, question mark, question mark. Are we preparing for a breakout? So that's something else for you to consider. And of course, you can go ahead and do the analysis, look at the weekly, the monthly time frame, and try and paint the picture to see if I've already seen it, but from your own perspective, if cable is something that you're looking at, especially long term, I think do the long term analysis and see if you can come up with a different potential destination. Again, this evening we have GDP numbers coming out of Japan, so I'm going to look at a cross that we haven't really looked at before. Cable GBP Japanese yen. The reason I'm looking so much at the pound is, of course, today, Monday the 17th, even though it's horrible, the weather's absolutely horrible here in the UK, from a sentiment perspective is great because we have the beginning of indoor activities taking place again, starting today. So you will be able to dine indoors. You will be able to go to social events, whether it's a gallery or it's a cinema, whatever it could be, whatever you're into from an indoor perspective, you will be able to start doing that from today, of course, with certain limitations and things of that nature. So I don't know, people who are eating outdoors in the pouring rain, just to feel like they were doing something, can now at least have some shelter. in their social pursuits. But looking at Gbp Jpy, and again, the first thing from my own perspective, when looking at a new chart, because I really haven't looked at this for a while, the first thing, let's even do it, guys. Let me just start from fresh with this. Let's just do a quick analysis from fresh and just probably end the session on this. So for me, the first thing I always like to do is zoom out. In zooming out, you essentially zoom in because you can tell yourself a story of what has been happening in relation to this market. You can go on to your indicators and try to paint the picture. The picture I see first and foremost is it looks like, I don't know, 133 at that point. That looked like a floor. But even before that, you had somewhat of you see ranges. It seems the market was trading in this range for a while, tanked, came to that low, and since then rallied again, created a new range, and now it's just broken out of that new range. In breaking out of that new range, it's created a higher high. So you have that new higher high created a new range from that last breakout. And the sterling yen rate is now trading, let's say, I don't know, between 149 and 153. Now it's recently just broken out of that resistance of 153. Now you can see it's at 154. The first thing I'm asking myself, again, just by looking at historically, you have these ranges, you have these ups and downs. Sometimes it breaks down below, sometimes like there, it breaks down above. The last time we saw it break down above, it continued and started a new high. But for me, the first thing I'm thinking is this a full, it can't be a false breakout if it's broken out for the last 1, 2, 3, 5 days. But are we going to see this remain, or is it essentially going to pare back down? So we've set a narrative of what we believe has been happening, but what do we believe will happen? That's where the RSI usually comes in next for me. And with the RSI, I'm able to look at the volume to see where it's sitting. And looking at where it's sitting, you can see 66 at the moment, that floor of around, that ceiling of around 72 there. But generally, it seems from the perspective of the last, since March at least, the markets haven't really passed this point. So the first thing I'm thinking of, the second thing I'm thinking of is validating my first point there is, do I believe this is going to come down? So far, looking at the RSI, the answer is yes. I do believe potentially if this remains within this area, it's unable to break through, you could see this come back down. And the third thing I like to look at thereafter is just the direction. What's happening with the moving averages? What's happening with the momentum? So again, of course, a lot of people use the 200-day, day email. I was hearing Mike V saying that's definitely one of the most popular. I think it's 200-day. I don't know. I had a table of the rank, but and this is why every trade is different, guys. Me personally, I don't know if there's something near my throat. Me personally, I very rarely use a 200-day. Me personally, I very rarely use a 200-day. And I don't know why, to be honest. I don't know why. I don't know why, but I very rarely use the 200-day. It's definitely one in some instances I look at, but very rarely do I look at the 200-day. I try to keep it more short to midterm, looking at, I don't know, 10, 25, 50. But again, it's neither here or there. And I think from your own perspective, you need to find what works for you. What could work for someone else may not work for you. Just because it may be popular for someone else doesn't mean it's popular for you. Yes, it could show you certain things. Absolutely. But it's a case of finding your own template, your own strategy. And I think that's the benefit of trading. Of course, there are no right or wrongs. There are no right or wrongs, just perspectives. And from my perspective, looking at these moving averages, you see that upwards crossover there has taken place, and now that 25 has crossed over to 50. So the momentum mid to long term as well is also showing us that upwards crossover there as well. And the last time we really saw that upward crossover, let's just zoom out again. That was the last time, like what we're seeing now there, that was the last time we really saw it happen, where the red, blue, and yellow were trading in such a direction. And you can see generally with these it takes a while to, in some instances, this is absolute rarity. These are the moves you really got to be involved in when it matures to that extent. We're not saying that's going to happen there, because if you look at the difference to Now I need to leave you guys, but let me just end on this note. And I'm going to leave you to go away and do your own analysis. And I'm not drawing any conclusions. But when I looked at the moving averages there, and it maturing and crossed over, I just automatically assumed in my head that the RSI would be oversold somewhere around there. But if you look at when that took place, guys, let's go down. Look at where the RSI was. Look at where the RSI was at the time. Look where it ended up. Look at where we are now. Look at where the RSI is now. It's pretty much at the same level. It's pretty much at the same level it was back there in November of last year that it is now. And you can see the moving average crossover is just beginning as well. So I'm not saying anything, guys. I'm not saying anything. I'm not saying anything in this. I'm not trying to allude and be ambiguous to say I believe another rally is going to come in. Who knows? Who knows? But what we do know is so far, it is positioned pretty much in an identical position to what it was in November. And we saw what happened November to May 17th. So guys, great session. You go away, you do your own analysis, you find your own opportunities. Maybe you can even, I don't know, communicate there in the chat box there, of course, on TradeGate Hub, and just give your own perspective to what you believe is happening with Gbp Jpy, what's happening with cable, what's happening with Bitcoin. It will be absolutely great to hear all of your point of views throughout the day. So absolutely great session. 2 minutes over our allotted time, so we do need to leave it there for today. So guys, great session, and I will see you tomorrow. Take care. All the best. Bye-bye.